Hey guys, welcome back. Sorry if this video is a little late. I got this really weird foot injury and I don't even know how I got it, but basically I was in pain pretty much all day today and last night, so that really sucks, and I really didn't have time or I wasn't in the mood to like film and edit a video, but I'm feeling a little better now. Well, at least well enough to make this video. So, you know, this whole ordeal just got me thinking of how important it is to have great health. So, you know, I had this minor issue with my foot and basically I lost a full day of productivity. So I wasn't able to do, like, I took like a half day off work day even, right? So like I couldn't even do anything productive. And yeah, I was just in bed all day basically, and my quality of life was super poor. So, you know, it wasn't like I was relaxing and whatnot. So even though I didn't really do anything today, it wasn't like I was relaxing. I didn't feel refreshed at all. So basically this whole day today, if someone were to ask me how did I feel about today, I'd basically be like, yo bro, I'm just straight up not having a good time right now. And, you know, I think this goes to show that why we need to retire early. And this is because when you're old, you're inevitably going to have more health problems, right? That's just a fact. You're going to have more health problems when you're old. And, you know, when you're old and retired, let's say you're like 65 or 70 years old, you might be rich by that point. But, you know, if your health really starts to go down at that point, it's like, what's the point, right? So basically, it just means that you work hard for decades for nothing because you wouldn't have like the health or the energy to really enjoy your money that you've worked hard for all your life. So sorry if I have to relate everything to retire early, but in my defense, you did click on a channel called Andy's Fire Club. And, you know, that's kind of the whole purpose of this channel, right? Is to explore how to retire early. So yeah, that's the whole point of this video as well. Anyways, today we're going to do a full portfolio reveal of my portfolio because it's gone up quite a bit since the last time I did a full portfolio reveal. And once again, I don't make this video to like brag or anything, but I just think that it could be worthwhile for me to explain each stock that I hold, the position I hold, why I hold each stock, and whether or not I'm buying, selling, or I'm just continuing to hold these shares. So I think this video is going to be very interesting. And yeah, hopefully you're excited. I sure as hell am. Without further ado, let's jump in. Okay, so first of all, this is my RBC Direct Investing account that I'm going to review. In case you're wondering what brokerage I'm using, I know I always get a lot of questions about which brokerage to use and whatnot. And you know, this is by far the majority of where my wealth is concentrated and where I hold all my US-based stocks. So as some of you know, I also have a smaller Walt symbol account, but the downside is that Walt symbol doesn't let you hold US dollars. And if I were to convert back and forth between currencies, at Walt symbol, they do charge a 1.5% currency conversion fee, so that really sucks. So for US dollars and for US stocks, I really do prefer to hold in my RBC Direct Investing account just so that I don't have to switch back and forth between currency. And even though I have to pay $10 per transaction as a flat fee, because of the amount of money we're dealing with, like thousands and thousands of dollars, right? It works out better for my favor. Without having to do the currency conversion. Anyways, we're not here to talk about brokerage today though. That's a separate video. We're here to talk about the portfolio itself. So I'm going to order my positions by market value size. So smallest first, and then we're going to go one by one from smallest to largest. And before I begin, let me just comment on the total size of the portfolios. And guys, I just gotta say, it hasn't been that long since I made a portfolio reveal video, my last one. And back then I had about 35,000 US dollars worth of stocks and cash combined. And yeah, once I look back on it today, wow, it's only been a few months, right? It hasn't been that long. And you can see that we've recently broken 48,000 US dollars. Like, that's absolutely amazing, guys. And you guys can see how much Canadian dollars that is worth right there as well. And yeah, absolutely amazing growth. Really great results here, I gotta say. Anyways, let's jump in, starting from the beginning, from my smallest position, which is Nordic American Tankers, ticker symbol NAT. Now you guys know I bought this back when we had that big oil crisis and oil futures went negative, and people were literally paying other people to take the future contracts off their hands because they were just trading the futures and they didn't actually want to take delivery of the contracts. It was hilarious. Anyways, NAT being an oil tanker company definitely benefited from that since we were running out of room to put all this oil, and we were basically paying really high prices to store the oil on NAT's tanker ships, right? So people were paying really exorbitant prices to store the oil on the ships. Since then, oil prices have risen and oil storage prices have dropped as demand has picked back up. But from what the CEO of NAT said in an interview with CNBC with Jim Cramer, and basically what the CEO said was that NAT was now making more money than they have ever been before in such a short span of time. So the CEO went on to reiterate that the main goal of the company is to pay out dividends. And, you can bet that there will be some huge dividends coming in the future, right? I mean, they already announced the dividend, which is going to be paying really soon. So I'll be getting that dividend. And yeah, it's an absolute huge dividend because it is 20 cents per share. Now, considering that each share is only like just over $4 or something like that, that's an absolutely huge amount. And if you look at the forward yield of the dividend, now it's at 18%. Now, is that dividend sustainable? Probably not. I mean, I have a hard time believing that a company can consistently keep up an 18% dividend yield in the long term. Either the stock will have to go up in price or the dividend will have to go down. But in the short term, you're getting some absolutely massive dividend in this company in the process. So for my position size, I have 250 shares at a cost basis of $4.60. So same as last time, I haven't sold or added any. Now we're down about 6% on this position, but then again, this is just a hold for me right now, right? So as I said, this is more of a dividend play. So the price movements for me doesn't really matter. I mean, the stock can go up or go down as long as I'm getting like 20 cents per share in terms of yield. I'm happy, right? So anyways, that's NAT. Moving on to the second stock. The second stock is Walt Disney Corp, ticker symbol DIS. Now, I'm sure I don't need to explain what Walt Disney does. I'm sure you all know. So I bought this stock back in 2019, right before the Roni situation. And basically I bought the stock at a really bad time because, Disney is obviously a company that's been very negatively affected by the Roni situation. And even now, as the stock market has roared to all-time highs again, it has just broken even for me just now. So I was down on this position for basically this entire time in 2020. So I have about 8 shares at a cost basis of $133.77. And as I said, this is obviously a business that's been negatively impacted by the Roni, and Disneylands all over the world has been forced to shut down. I mean, Disney cruises as well. And sports games are only starting to come back now, right? So, but I think that long-term Disney is still a great company, and this is just because of the wealth of intellectual property that they have. So I think that the property that they have, they can't be replicated by anyone else, right? So they own Marvel, Star Wars, Pixar, just to name a few brands, and many other brands too in the entertainment industry. And in my opinion, these brands are not going away anytime soon, right? So if you just ignore all the noise, if you just ignore all the negative press that the Roni situation has brought, if you just think about the long term, I think long-term Disney will be absolutely fine. So I think that it's hard to go wrong with Disney in the long term. That's just my opinion though, so I'll leave that there. This is just a hold for me at the moment. I mean, at these prices, I'm not really looking to load the boat on it or anything, because obviously this is still a situation that is still developing, and who knows if the Roni flares back up, Disneyland could be forced to shut down again. You never know, right? That's always a risk. So that's just a hold for me. Anyways, that's Disney. Now moving on, next stock is Costco. And I'm not going to spend too much time talking about this one because I already made a video talking about this, and you can check it out. I'll leave a link down in the description, or you can check out the thumbnail here. But yeah, anyways, I have 4 shares of Costco at a cost basis of just about $300 exactly. And as you can see, we're up quite a bit on this position, and I'm kicking myself for not buying more when I had the chance. Basically, with Costco, what can I say about Costco, right? You guys know about Costco. If you live anywhere in the United States or Canada, you've probably been to a few Costcos, at least a few times in your life. So basically with Costco, you guys know that the traffic is insane no matter what day of the year it is, right? So no matter if there's Roni situation, no Roni situation, no matter if it's holiday season or if it's just regular time, no matter if it's weekday, weekends, it's always busy. You guys know about the traffic. The traffic is insane even during a pandemic. So, long term, I think that even though everyone's moving to shopping online, I think that some things like groceries and things like that, or things that need to be refrigerated in general, I think that Costco still has a defined edge over, let's say, an Amazon or something like that. So I just can't see companies like Amazon even taking away Costco's business, just because, if you're going to order 10 pounds of raw meats or something, you probably don't want to have Amazon leave it on your porch or something, right? And it needs to be refrigerated or else it'll go bad. And even though they solve this problem, it's going to be hard to match the scale of Costco, right? Do you know how much the regular family spends on Costco? You know, I know for my parents, when they go to Costco, they spend like $200 at least, and that's like on a saving day, right? Like I've known people that spend like easily like $500-600 just per trip to Costco. You can very easily spend $500 just on like random foods, not even like if you're buying a TV or something, right? So yeah, I think that it's going to be hard to match the scale of Costco, and also it's going to be hard to match the price of Costco. So yeah, it's going to be hard to compete with Costco in terms of cheap groceries, in terms of the prices. So you know, it's a thing that I think that even Amazon would have trouble with, never mind like any other player in the market, right? So if you're going to open up a grocery store on your own, just like if you're going to open up like Bob's grocery store next to a Costco, good luck. That's all I'm saying. Anyways, moving on. The next stock is a new addition to my portfolio, actually. I've just added this one, and it is Stratasys. Ticker symbol SSYS. Now, I bought 100 shares at a cost basis of $14.83. Currently, we're down just a little bit on our position, just about 2%, so we're almost break even. And I actually made a video about Stratasys as well, so I won't go too into depth about it. So please check out that video if you haven't seen it already. But anyways, just to reiterate what I covered in that video, Stratasys is a company that makes 3D printing solutions, mainly for commercial use. And Stratasys stock used to be a really high flyer back in the day, right? Remember when we had that big hype phase about 3D printing, and like everyone was gonna have a 3D printer in their house, and we're all just gonna like 3D print random stuff? Well, that never materialized, and when people realized that that was just like sort of a hype, and that was just like a dream, basically the stock crashed through the floor, right? So once the hype was over, the bubble kind of burst and the stock just crashed. But I think that right now you're actually getting a very undervalued company if you buy into Stratasys at this moment, just because, you know, for what it is, I can tell you that Wall Street is giving Stratasys zero respect, right? So they're trading at a price to sales ratio of about 1.4 right now, and a price to book of below 1. Like, these are not tech company valuations, guys. These are just like, you know, a value stock valuation basically. And you know, even in normal times, never mind if you look at tech companies now, like for reference, Apple is at a price to sales ratio of like 7, right? So I know that you're gonna say
you can't compare Stratasys to Apple because they're two completely different industries and two completely different companies.
And yeah, you know, I understand that, but I'm just trying to point out how much analysts like don't believe in Stratasys right now. Now, in my opinion though, Stratasys, for what it is, seems really cheap. Also keep in mind, they've gotten a vote of confidence from ARK Invest, which as of June 30th, 2020, owns about $179 million worth of shares. Which is a sizable position if I do say so myself. Now, in this environment where the stock market in general seems super overvalued, I don't feel too bad about owning Stratasys actually, because I feel like they're undervalued, let's just say that. Anyways, that's Stratasys. Again, if you want to check out more information, I just ran through it really quickly, but if you want to check out more information and more of an in-depth analysis of Stratasys, please check out the video that I made earlier about Stratasys specifically. Links down below in the description for that one. So moving on, the next stock is Visa, ticker symbol V. Now I have 7 shares of Visa at a cost basis of $201.70 per share. And currently we're up about 7% on this position. And you know, what can I say about Visa? Well, we're moving more and more towards a cashless society now, like it or not. In fact, I heard on the news apparently there's a coin shortage. Yeah, I'm not sure if you guys knew that, but apparently there's a coin shortage. I mean, it makes sense, right? I don't even remember when's the last time I paid for anything with a coin. I just don't do that anymore. I can't, like, I barely even use cash anymore. And I think in the future it's going to become more and more rare for us to use cash to buy things. And I'm not just talking about credit cards too. So with Visa, there's Visa debit cards as well. So Visa is just a network that processes the payments. It's a payment processing network. And due to the Roni situation, a lot of places don't even take cash anymore, right? Because they don't want to touch bills that have been touched by just like random people. So if anything, this whole situation with the Roni has greatly accelerated the change into a cashless society. And in fact is, if you're a business that only accepted cash before, let's say, and you've probably been forced to accept credit cards and debit cards because of the Roni, right? And you know, once the Roni situation is over, it's probably unlikely that you'll be switching back to accepting cash only again because you already have the system in place now. So I think long-term Visa stock will do very well, and I'm very comfortable holding this position for the long term, and I'm not planning on selling it anytime soon. So yeah, anyways, that's Visa stock. And actually, I'm going to end part 1 of the video here just because this video is getting a little long and I don't want you guys to sit through like 45 minutes of just me talking. But in part 2, we're going to talk about some of my bigger positions, which I'm sure for long-time viewers of this channel, you guys can probably already guess what's in my portfolio for my bigger positions, right? So yeah, it is probably not going to be a huge surprise to a lot of you, but there will be part 2, and I will be releasing part 2 very soon. So I'm going to end part 1 right here. And yeah, stay tuned. I'll be back shortly with part 2. So be sure to hit the like button if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram. Links down below in the description as always. And with that being said, I'll see you guys in part 2 of the video. Bye-bye.